Hey guys, the world is gradually transitioning from fossil fuels to clean energy alternatives, and many companies and governments across the world are starting to increase their focus on prioritizing clean energy and reducing their carbon emissions. Because of this ongoing shift, I thought I'd take a look at some of my favorite clean energy companies to potentially buy or at least look into. I'm going to be talking about 5 different companies here, and I'll sort of give a brief overview of each of these companies, looking at the key points, what the company does, and my overall opinion on them. If you do enjoy this video and you want to see similar stock videos in the future, be sure to leave a like and subscribe, as it really does help me out a lot. And apart from that, let's get right into it. So the first company here is Enphase Energy. Now, Enphase Energy is an energy technology company that design and manufacture software-driven energy solutions for homes and buildings, including solar generation, home energy storage, and web-based monitoring and control. They currently trade for $212 per share with a market cap of $26.8 billion. So they are a leading global solar microinverter company with more than 1.3 million systems installed across more than 130 different countries. The all-in-one system has microinverters connected to the solar panels on the roof of your home, which then connects to a communication hub called the combiner, as well as the energy storage system. The customer can then use an app on their phone to actually control how this stored energy is used for their home. The addressable market for Enphase's products and services is expected to increase quite significantly over the next few years. Residential solar is expected to increase to $4 billion in 2022 from $2.5 billion in 2019. Small commercial solar is expected to increase to $1.5 billion in 2022 from $300 million in 2019. And then residential storage is expected to increase to $3 billion in 2022 from $500 million in 2019. At the same time, the off-grid solar and storage market that doesn't exist as of right now is expected to be as large as $4 billion by the year 2022. So as you can see by the forecast growth in these markets, Enphase's products are definitely in a hot market that's expected to really increase over the years to come. Enphase have grown their revenue significantly over the past few years. Trailing 12-month revenue is up to $721 million compared to $624 million in 2019 and $316 million in 2018. As well as this, the trailing 12-month operating income is up to $135 million compared to $105 million in 2019 and $5.7 million in 2018. Enphase is priced quite high, currently having a PE ratio of 149. However, the solar, energy storage and home energy management markets are definitely going to continue to grow for the years to come. So next up we have Plug Power. Now, Plug Power is the leading provider of hydrogen fuel solutions that replace conventional batteries in equipment and vehicles that are powered by electricity. This includes hydrogen fuel cell modules used to power vehicles, as well as hydrogen refueling stations. They currently trade for $66.87 per share with a market cap of $31.3 billion. They have different fuel cell engine modules that range from under 5 kilowatt hours for drone vehicles right up to 250 kilowatt hour engine modules that are used for large trucks, buses and rail. As well as this, the number of hydrogen refueling stations is now over 100, with this number expected to grow to over 500 by the year 2024. Plug Power are set to expand in South Korea after forming a joint venture with one of South Korea's biggest oil companies, SK Group. The South Korean government has set a goal for their hydrogen economy to reach $40 billion by the year 2040. Expansion into Europe is also on the horizon, with Europe requiring a €65 billion investment into hydrogen by 2030, as many major European cities are banning diesel vehicles from 2024 and onwards. A joint venture with French car company Renault has also been announced, targeting a 30% share of the fuel cell powered light commercial vehicle market in Europe. The revenue growth has been fantastic over recent years, with trailing 12-month revenue being $308 million, up from $230 million in 2019 and $175 million in 2018. Analysts do predict 2021 revenue to be up to $448 million, which will definitely be a step up from 2020. However, it is definitely a realistic expectation given the growth of this sector and the expansions into other continents that Plug Power are making. Plug Power are currently making a loss in terms of operating income right now. However, they do claim that they are on track to achieve $200 million in operating income by the year 2024. They have a price to sales ratio of 101, which is very high. However, this is due to the significant levels of growth that is expected from this company being priced into the current share price. So next up we have Sunrun. Now, Sunrun are a residential solar panel and home battery company whose goal is to run the entire planet just off the sun's energy. They operate with a solar as a service model, providing clean energy to households for little to no upfront cost, and have more than 500,000 customers across 22 US states as of right now. They currently trade for $86.39 per share with a market cap of $17.1 billion. Their solar energy agreements are usually fixed at 20 or 25 years, which does generate recurring contracted revenue for them. Customers normally save anywhere from 5 to 45% in their first year, while benefiting from the premium power and backup capabilities that Sunrun do offer, helping customers to still have power during a storm. They do also have a strategic partnership with Enphase, who provide their microinverters to Sunrun to use for their solar as a service business. Residential solar has only reached 3% of the market right now, and this is projected to increase to 13% by the year 2030. Now, this does open up 77 million potential additional homes and potential customers for Sunrun. With a net customer value of $6,500, this represents a massive increase over time of potential revenue and profit for Sunrun. Revenue growth has been quite good over the past few years, despite the impacts of the pandemic having a bit of a hit on their 2020 revenue. Trailing 12-month revenue was $845 million, slightly down from 2019 revenue of $858 million. This is still up significantly from the $760 million in 2018 and $530 million in 2017. Despite the slight setback in revenue growth this year, analysts do predict that 2021 revenue will be $1.4 billion, which is a massive increase from their 2020 revenue. They have a price to sales ratio of 19.25 right now and a forward PE ratio of 191. So again, they are fairly pricey, but the company and industry are both going to grow significantly over time. So next up we have American Battery Metals. Now with this company, they are a bit more risky. They have a much lower market cap. They are a penny stock. So there's probably potential higher gains with this company, but at the same time there is a lot more risk. So American Battery Metals Corp are a lithium-ion battery recycling technology company who also carry out advanced material extraction with extensive mineral resources in Nevada. They are currently trading for $3.28 per share with a market cap of $1.6 billion. They recently reached the critical milestones that they needed to construct and commission a brand new pilot lithium-ion battery recycling plant in Nevada. Now, this facility will have the capacity to recycle 20,000 metric tons of stock to recover critical materials that are needed to manufacture brand new electric vehicle and consumer electric batteries. This will also prevent the lithium-ion batteries from ending up in the landfill waste site, which is obviously pretty good as well. It is predicted that this brand new facility will generate $160 million in revenue every year for the company. Lithium-ion batteries are an important part of the electric vehicle food chain, a sector that is rapidly growing over the years and will continue to do so. It is predicted that the demand for lithium-ion batteries will increase more than tenfold over the next 10 years. So as I mentioned, this stock is quite speculative and it is quite high risk as they do not have any solid financial track record as of right now. This is because the company is still relatively new and still sort of getting up to speed. However, if they can continue to grow and scale their business, then I think this stock could return pretty big gains over the years. And then the final company today is Tesla. Now, I think everyone knows who Tesla are. Being the number one electric vehicle producer in the world would be a good enough reason alone to own them for exposure to the clean energy sector. But they are also in the solar energy sector as well, which has a massive potential in the future. They currently do trade for $846 per share with a market cap of $802 billion. So Tesla is not just a car company, they are a powerful technology company that have some of the most advanced battery technology and energy storage technology out there right now. Every quarter, Tesla are making developments on their battery technology, increasing the efficiency gradually over time. On the last Tesla Battery Day in September 2020, Tesla did announce that they are on track to reduce their current battery pack cost per kilowatt hour by 56%, enabling the production of a profitable $25,000 price point vehicle. This would be groundbreaking if they can achieve this, because no other car company as of right now has the technology to achieve this and even come close to this, meaning that Tesla could crush competition on price or force them to take losses on their vehicles to compete. Tesla claim they have the cheapest solar energy at the moment at $1.49 per watt, and Elon Musk did say himself that in the future Tesla Energy could be bigger than Tesla Automotive. This part of the business has barely got started yet, and with the technology advancements that Tesla have made so far, they could be in a brilliant position to rapidly expand this section of their business going into the next 5 to 10 years. Tesla have experienced amazing revenue growth over the recent years, growing revenue from $11.7 billion in 2017 to a trailing 12-month revenue of $28.2 billion, with analysts predicting that their revenue could be $46 billion in 2021. They are also starting to become a profitable company, which is definitely good to see as well. So the stock is quite expensive right now, with a PE ratio of over 1,000 and a price to sales ratio of 28.6. However, some would say that this is the price you have to pay for a company that has such an insane amount of potential across different sectors of the economy. So that is all for today's video, guys. Hopefully this video did give you some ideas on potential stocks you can look into, maybe do a bit more research into them and potentially invest in them. Obviously these 5 picks were just sort of my own opinion on good stocks that I quite like the look of. That doesn't necessarily mean that they are the right company for you to invest in as well, so I do encourage people to do their own research on these companies as well. This video is not financial advice. I'm not a financial advisor. It is just for purely entertainment purposes only. With that being said, if you did enjoy the video, be sure to leave a like. If you want to see similar videos to this in the future, be sure to subscribe as well, as that really does help me out a lot. Drop a comment, let me know what your favourite company is from this video. And apart from that, guys, thanks a lot for watching.